Hello, hello. Welcome back to Premier Studying Investing. Going to be looking today at Fission Uranium Corp. They're traded on the Toronto Stock Exchange, FCUUF. We've talked before about how you can, if you want to get currency diversification, the ticker would be, or the symbol to enter, FCU:XTSE. So I'm trading from America, but this way you could hold it if you wanted to in Canadian dollars since they're a Canadian corporation. It's not really the point of this video. The point of this video I want to try to look at is you can buy a company like this currently for less than what the value of it is according to the book value, the tangible book value. And we're basically trying to hone our skills, right? We're trying to ask certain questions about investing. I bought this company previously, maybe somewhere in here, not at the bottoms at, whatever, 10 cents or whatever this was back in, this was the March dip in 2020. But here it was pretty low as well, down under 20 cents. I maybe bought it between 20 and 30 cents. Not a lot. But the thing I want to ask is, just because a company is trading, the stock is trading for less than the tangible book, does it make it necessarily a buy, or how should you think about that? It is an attractive option. Tangible book is basically what is the value of the tangible assets. So if you had a liquidation type of event, then what could you get for all their assets? The land, the property, the equipment, the factories, whatever, all the tangible assets. If you sold those off, currently what they're valued at, like you could get 46 cents per share for this company here, and it's trading at 40 cents. You can see it's down 7% this weekend, so I thought it'd be a good time to make a video. Let's look at some other issues. We're going to look at their ratios compared to some competitors like Cameco and companies like that. We're going to look at the uranium price. We're going to be looking at the strength of the dollar. But I want to start here. One thing to notice is annual income statement. As you can see, going back 5 years, they never made over $1 million. I don't know how they round this, so I don't know if you make like $980,000 in a year, if this is still going to read zero. This is on Schwab, the way that they measure it. Or if you just have to make like a little bit more than, like if they round up. So if I made like $501,000, would this be one? I don't know. But the point is basically no income, but also very low on the expenses. 3 million, 7 million, 5 million, 4 million, 5 million. So it's not like they're burning through a lot of expenses. So even in past years, interest income, some like sales, basically a non-factor. For the most part. A little bit of interest expense, but not much really there. So again, this is a company that does uranium exploration. They're very small, about 300 million on the market cap, and the enterprise value is somewhere like right around 300 million. One thing that's nice to know is that there's not a lot of dilution, so basic weighted average number of shares is 391 million. Diluted weighted average shares, same, 391 million. So it's not like there's a bunch of convertible debt out there or warrants or any type of things like this. Basically, we don't have to worry that much about dilution as it stands. Okay, so let's go and look at their balance sheet. Annual, going back to 2016. I'm going to skip through a lot of this stuff. I'll leave as much on the screen as I can. But total assets is 276 million at this point, okay? And you can see most of their assets are in property, plant, and equipment, and they've spent a little bit, maybe 6 million, but not a lot of other increases in assets. Remember, the accounting formula is assets equals liabilities plus shareholder equity. So here, if we look at all of the liabilities, we come down here to total liabilities, only 8 million. So again, not a lot of payables are accrued, not a lot of lease obligations. About 6 of the 8 is long-term debt, so not even short-term debt, which means that the rest of it, so the total liabilities and equity is 276, and almost all of that is equity. Okay, so common stock, they've put basically their losses into retained earnings, and so their common stock minus the 75 gives us the total equity. Let's do a quick company comparison. Let's do Energy Fuels. Let's do CCJ, Cameco. Let's do NXE. Whoops, NXE. Next Gen. Let's do Uranium Energy Corp. And let's also do one more, AZZUF, which I don't like trying to say this. AZZUF Uranium. Okay, so now we have something to compare this to. Cameco is obviously kind of the largest, most recognized company. But let's see what we have. This is the first point, price to tangible book as a ratio, right? So if price is $1, that means the tangible book would have to be over something like $1.10, right? And that would give you a ratio of less than 1. We'll see that again as we go down, but compared to their competitors, you know, nobody is trading at a huge multiple. The largest multiple, 5.44 over tangible book. Okay? The other thing, who has sales? I mean, sales growth. No. EPS growth? No. In fact, some of these are really atrocious. Cameco. So we'll look to see a little bit of the story on the price of uranium in US dollars. And it's not like an atrocious low, but it apparently is not high enough. And what I tend to hear when I've watched other videos and looked at this is just it's not high enough currently to be able to cover the cost of production, the operating cost. So everybody has negative EPS. Dividend is basically insignificant or non-existent. We have a couple people, gross profit margin 50% and 3.6, but then for, again, this is Energy Fuels, UUUU. Once they take out the operating expenses, it puts it negative 1,640%. These are in percentages. So profit margins are bad if people have sales at all. But then here, this is the one that I want to draw our attention to. I don't know what all these companies are selling for. Actually, I have it right here. So let me tell you. So I'll start with Fission, the one that we're looking at in this video. They have tangible book. Let's look at tangible book actually instead of just book. So a company can have tangible assets, right? And then it can have intangible assets like their brand name or intellectual property, right? These are non-tangible things that are worth money. But it looks like for most of these companies, here we see a significant amount, right, for UEC, a significant amount of intangible value or intangible assets. Takes it from 36 cents to 63. But for the rest of these, they're basically the same. But we're going to look at tangible book because that's important. Okay, so let's look at which ones of these are selling for a premium to book. Okay, so currently you can buy Fission, this one here, for 41 cents. UUU is selling for 5.10, so that's a big premium to over book. What about Cameco? Selling for about $17. This only has $9.65 of book. NXE is trading for $4. It has 72 cents of book value. UEC is trading for $2.11. It has 36 cents of tangible book value. And then AZZUF, let me just scroll up here, 24 cents you can buy it for. And tangible book is 21 cents. So this is the only one of the list that we have on the screen. Fission is the only one that's selling at a discount to book value. Okay? Now, we don't have any sales, but neither do a lot of these other people. You know, there's no growth. The other thing that's interesting is that Fission, it's not, it's losing money. Of course, you'd always like to see your returns positive, but these aren't awful numbers, right? I mean, some of these, negative 16, 18%, negative 39% return on assets, negative 55% return on equity. Okay, so it just gives you like an idea, a nice way to compare it. I want to jump over here to trading economics just because probably I'm guessing you have some interest in the uranium story if you clicked on this. I think we've seen that there's multiple factors, of course, that play into buying a stock, and price to book doesn't tell you everything, but it does tell you something that is very interesting. As we saw in the summary chart, I guess if I need to go back. I mean, if we go back to the summary chart, has it gotten above its book value? Yeah, it's gotten to 60 cents almost, maybe somewhere in the 50s. All these are above the 50 line here. This is for Fission. But also many, many times it's traded at a huge discount to book. So I think I said I bought somewhere in here. I don't remember exactly when, but I thought, you know what, this is I didn't put a lot of money into it, but that was kind of my rationale. Hey, this is trading at a huge discount to book. At the very worst, this thing goes bankrupt and they sell off all their assets, and we can still recuperate most of these losses. Let's go over back to this uranium story. Trading economics, the NYMEX, this is the New York Mercantile Exchange. Uranium futures fell below $32 a pound, the lowest since end May, as a stronger dollar is reducing the appeal for commodities priced in the currency. Really? I thought, really? So here's the US dollar index DXY. I'm going to take a quick look at the 3-year chart, and then I'll give you a quick little definition from Investopedia about what this index is. But essentially it's the US dollar compared to a basket of other foreign currencies. And like we said, you can see 19, 20, and 21. So this is indeed the 3-year chart. According to that article we were just looking at, does it really seem that the dollar is that strong? It's not that strong compared to the 3-year look. It's almost, it's as low as it's ever been over the last 3 years. Maybe I need to go to the 10-year. And if we go to out 10 years, it's in the middle. It's definitely in the middle. People asked, what is the US dollar index DXY? The US index can come under the USDX, the DXY, the DX, or informally it's called the Dixie. It's an index or measure of the value of the US dollar relative to a basket of foreign currencies, often referred to as a basket of US trade partners' currencies. Okay? So, I don't know that I buy that so much from trading economics, but if they want to say that uranium prices are low because of a strong dollar, I don't buy it. I don't see a particularly strong dollar based on what we just saw on the 3 and the 5-year, 3 and the 10-year chart. But anyways, we'll keep going with them. Still, uranium prices remain close to a 1-year high of $32.70, hit in July, supported by lower supply and growing demand as governments from the U.S. to China see a role for nuclear power in their clean energy programs. This is interesting. The U.S. reportedly seeks to use funds from the infrastructure bill to revive the nuclear power industry, which provides about 19% of the nation's electricity and has been beset by a wave of reactor closings as it struggles to compete with cheaper electricity produced using natural gas and increasingly renewables. In Europe, I'm not going to go on. We have a family friend. He works for a local energy company. He was talking about in 2020, Texas in the United States had a big problem. They had energy outages throughout the state for 3, maybe 4, maybe even 5 days. I'm not sure, because they had basically like record lows during the winter. And one thing that this friend of mine told me, he was saying, look, he wasn't a big fan of green energy simply because from the aspect of it's not as reliable. Some things he told me, he said the wind turbines, once they get below a certain temperature, the viscosity increases, or there's more friction, right? Those lubricants start to freeze up, start to congeal, start to have some problems. They get thicker, and it basically brings those turbines to a stop. He also said, in Texas, or if you have certain places where you're not used to getting a lot of snow, well, how much solar power are those panels really going to be able to pick up with even a little bit of snow on them? Not very much, right? So you have to have people go out there and attend to that quickly. Those are some of the reasons he was more in favor, or at least was concerned about some of the U.S. power grid capabilities, you could say. All right, so we've looked at a lot of things. I want to give you just a quick sense, if you're interested still at this point, in the uranium story. Let's check this out.
PLS project is located in Saskatchewan, a Tier 1 mining jurisdiction, and the sole source of Canada's uranium production for over 60 years. The project hosts the Triple R deposit, which, at a 0.25% cutoff, has a current indicated resource estimate of 102 million pounds U3O8 in 2.2 million tonnes, and an inferred resource of 32 million pounds U3O8 in 1.2 million tonnes. Starting just 50 metres below surface, it is the world's largest undeveloped uranium ore body with high-grade mineralization at shallow depth.
I will add that if you look at their corporate presentation, they do claim that this area in Canada, I think Athabascan Basin, it's on the Saskatchewan-Alberta border, so pretty far north, pretty tough working conditions it looks like in the winter, but they claim like really, really world's leading best quality grade of uranium. Also, I'll point out, listen as he says, that this is basically, these are not real assets, this is a proposed project here. They haven't listened if he says that or not, he'll say that.
A pre-feasibility study in 2019.
It's a pre-feasibility study,
which proposed an underground mine plan, highlighted robust economics, including the potential to be amongst the lowest operational cost uranium mines in the world. The world-class Triple R uranium deposit is open in multiple directions and is accompanied by no less than 3 additional high-grade uranium zones along trend. While these zones are not yet part of the mine plan, they do have the potential to be added. Drilling in 2021 will focus on key areas of the Triple R deposit and its largest adjacent zone, the R840 West. The program has the potential to significantly enhance the size and value of the resource that will be used in the coming feasibility study. Fission's management is run by its recently appointed CEO, award-winning geologist and uranium expert Ross McElroy. Ross is supported by leading uranium mine engineer and former MacArthur River general manager Gary Hayward, along with another former senior Cameco employee, permitting and ESG veteran Mark Woodruff. Rounding off the team is, of course, Fission's talented VP of Exploration, Ray Ashley. With strategic investors including CGN, one of the world's largest uranium consumers, and with 2 successful financings recently completed, Fission's team has laid out a clear path for developing PLS and is laser focused on delivering to plan. Learn more by visiting our website and signing up to our email list.
Okay, so this is Fission Uranium Corp. Again, this isn't a paid advertisement. I'm not receiving any benefits from them. I do hold them, and this is not stock advice. So, do your own research. But really the point of this isn't really so much to do a video on exploration company in the uranium space. It's more to look at, as investors, what do you need to look at? If you can find a company that's selling at a discount to book, does that mean it's an automatic buy? Well, we saw, not really. And it's hard to say that just because you can buy it at a discount that you're getting in at a good price. And I think the chart proves the point. You could have got in under 30 cents, under 20 cents even, somewhere around 25 cents. So this whole space in here, everything under 45, everything under my cursor, is at a discount to book. Well, it doesn't necessarily mean a whole lot. It is interesting. This is probably one of those companies that they're not selling uranium, so it's not like a near-term. I shouldn't say. It'd be interesting to see how the stock is correlated to the uranium spot price or forward price. But I think that is a nice way to look at screening. There's a lot of different ways to screen companies. Definitely, you could think, if you're very worried about a downturn, that this company could liquidate their assets and essentially return 46 cents per share to shareholders. Okay? So anyways, well, thanks so much. We'll see you on the next one.